which is probably by the time this triggers, that will be at 235. So I'm going to call it a close blow at 235. We then could trade down to a full target of 223.31.
Wow.
Yeah, I trade this as two targets too, because the shorter target is where the prior breakout zone was. So that target's 226.28. So I trade this two targets.
All right. Will you let us know if that triggers?
Sure.
Please.
I'll keep an eye on it. But there's your Goldman Sachs potential double top.
Perfect.
And
all right, gentlemen, I have to take off to attend a very important meeting. Why did I think that as well? Oh, take off. Okay.
Take off, eh? Okay, that was a great show, eh?
Said it.
Hey, you want to play Beer Hunter, eh?
Take off, you hoser.
You hoser. You can't do that. I'm Canadian.
That was a great song in 1980. What was that? When did that come out?
I used to have that album, though. I used to have that on time.
That wasn't just a Canadian popular thing. 1994 it was released. That surprises me.
No way. They got the hoser.
Geddy Lee was in it. Geddy Lee
from Rush. I was just going to say.
Also Canadian.
Well, all of Rush is Canadian.
By the way, to me, if you've never listened to Rush, you're just crazy. I mean, you don't have to love Rush, but if you never listen to them, you're just crazy.
The advice provided on this podcast is general advice only. All statements made are considered by the participants to be accurate, but accuracy cannot be guaranteed. It has been prepared without taking into account your objectives, financial situations, or needs. All participants in this podcast, including guests, may have a financial interest in any or all of the products or services mentioned. Before acting on this advice, you should consider the appropriateness of the advice, having regard to your own objectives, financial situations, and needs. If any private products are detailed on this podcast, you should obtain a product disclosure statement relating to the products and consider its contents before making any decisions. Where quoted, past performance is not indicative of future results.
Recorded October 27th, 2017. It's the Money Path Podcast with your hosts, Bob Iacchino and Mike Arnold, founders of Path Trading Partners. On episode 95, the What and the Why is sponsored by Motive Wave. Go to pathtradingpartners.com and download your 14-day free trial. So let's join a show in a can with Bob and Mike with conversation on the news and markets.
Oh, hold on, though. We have breaking news.
We got breaking news?
Yeah. Because Jeff Bezos he's surpassed Bill Gates as the world's richest person.
He has done that before, right? And then he's fallen back.
Yeah, but that was he did it for under a day. So we'll have to see. But right now because they're at new all-time highs. Mm. They're all new time highs. Or a lot of time highs.
A lot of time, yeah.
A lot of high times. So they're trading right now at 1079. They were up to 1085. We'll get into their earnings later, but we have Jeff Bezos. He's added $18.1 billion to his net worth this year. And after earnings last night, his net worth went up $7 billion just on the earnings. Big gap up. So I wonder if he ordered an iPhone X. So that's the breaking news. And just for Stafford, Star Trek Discovery has been renewed for a second season.
And that takes you right into the next piece of news.
What? The Netflix is selling $1.6 billion in senior notes.
And what is that going to pay for?
Are they paying for Discovery again?
Oh yeah.
So Netflix $1.6 billion, notes par to yield 4.875%. So That's what they were able to. They were actually able to raise capital slightly better than Tesla.
They should be raising capital a lot better than Tesla.
Don't pick up Tesla.
That's not a positive comment on Netflix. It's more of a negative comment on Tesla. God, I hate that stock.
What, Tesla?
I hate that stock. I hate that company. I don't mind the look of the car.
We'll get to that. We'll get to that. Oh, it's been a juicy week for Tesla.
It seems like this is going to be the ruin of that guy.
Oh boy. Let's see. And that leads us to food and fashion, Nook. Stitch Fix. Because we've talked about them before, in the whole Amazon, going to ship you the goods. You can ship back what you don't want for free and everything else. But Stitch Fix is that company that they'll ship you a box of stuff, and you get to choose your items. The more you choose, the bigger discount it is. They're going to go public.
They have so much competition already. I mean, I can't believe they have $1 billion in sales.
They have, their symbol's going to be FIX.
Mm-hmm.
So is that going to be, is it going to be a Blue Apron?
There's a lot of ship a box, pay for what you keep companies. The difference with Stitch Fix is the discount. So, yeah, I mean, that's really the difference. The other ones don't really do that. The other ones that I know of anyway don't really do that. I mean, you've got Not Standard, you've got Trunk Club, you've got, there's dozens of them already. It feels more like a Groupon to me than a Blue Apron.
What do you mean a Groupon?
Well, Groupon was worth $3 billion to Google. Then IPO'd somewhere around 6 or 7 billion and precipitously fell from there. But then didn't turn into just a complete disaster like Blue Apron has so far. So, I mean, as soon as Groupon's value became public and became, it became known that Google wanted to pay $3 billion for them, everybody got into that space. And this is another one. There's already a bunch of people in this space. Things to me that are easily repeatable like this, it's just not. I just don't care for it.
Well, Groupon, for what? It was traded as a high of 843, went down to a low of 215, so pretty much cut in a quarter. Now it's trading 451.
Yeah.
So it's pretty much trading half of its high valuation mark. Let's just see, where's Blue Apron for the week? I have to check on my Blue Apron. It is at $5.11 after setting a new low this week of $4.83.
Yeah, I mean, Groupon IPO'd when? In, I want to say December? No, it wasn't December. Let's see if I can find this.
Groupon came out in October of
13 or 12, right?
I thought it was 14.
Was it?
Yeah. Yeah, it's October 14th.
I don't feel like that's right because I've got data on my chart from before that, but...
Huh? You do?
Yeah, if you go on a monthly chart.
That was my bad chart. It came out in October of 11.
Yeah.
There we go. So I was wrong on my numbers, too. The high was 31.14 all the way down to a low of 215. That hurt.
Yeah. I mean, and then it just did nothing, right? So maybe I'm giving Groupon too much credit. I haven't looked in this stock in forever, but it just doesn't interest me, Well,
it's done nothing. Well, it's not on its lows, but it's not going anywhere any soon. I don't see it going back to 31.14.
Yeah. I mean, Groupon opened at $28, 40% above its target, November 2011. And then, like Mike said, just basically fell from there and then has been sideways ever since. So, yeah, Stitch Fix is probably a Groupon. Probably.
So it's not one we're going to rush out and...
Yeah.
Yeah. By the way, we haven't checked on Snapchat lately because I don't think it's been doing anything. And 1444. So it's just hanging out, sub 15s in a congestion. Nothing to see here. So Stitch Fix. Guess we're not going to try to get onto the list of people who get to invest early.
Right.
Let's see. Amazon. We've already talked about. Who do we talk about partnering to let people in your house? Was that Walmart or was it? But Amazon's now starting next month. Customers in select areas will be able to first of all, you could order takeout using Amazon app from local restaurants, and then now they've also introduced in-home delivery at no extra cost. The Amazon Key product opens your home for indoor deliveries. Prime member only service called Amazon Key uses a smart lock and connected camera. When a delivery is made, the courier scans the package's barcode, which sends an instant request to Amazon's cloud. When it grants permission, the camera starts recording. The courier swipes a prompt on their app, and then your door unlocks. They leave the package by the door and relock it on the way out. You'll get a notification that the delivery has been made, along with a video of the drop-off to reassure you everything was done above board.
Wow. And that is a ton of cost, isn't it?
The smart lock, which you have to put in your house, and the cloud cam, and installation will set you back $250. Prime customers can pre-order as of a couple days ago, and the key service is becoming available on November 8th.
So I love how they say Amazon introduces in-home delivery at no extra costs, but it'll cost you $250 to get it.
Yeah, which is you have to buy it from them. So
yeah.
It's not like you can have any smart lock. You have to have their smart lock.
I mean, I guess if it's if you get a lot of high value packages, if you get toilet paper, I'm still waiting for the drone to throw it in the window. But if you get toilet paper and laundry detergent, why would you want to do that?
No, but
and then again, this whole thing, there's going to be an Amazon cloud camera in your house all the time. My guess is one of those round ones that can see your whole house. I just don't have any interest in that. I used to drive a bread truck, and my father used to go around with these pieces of press board to these restaurants that didn't want to give us a key so we could put the bread inside, and he would build these boxes with padlocks on them for the people. And he would put them on, somewhere in back, and he would put a padlock on with a key, and he would give the owner one key and the truck driver the other key, and we would go around throwing the bread in these boxes. And he would, shingle them, make the roof angled and larger so that if it rained, it didn't rain inside the box. I would rather just do that. Build a box outside.
But you could put a smart lock on the box.
Amazon camera. There you go. So then you get a video of him putting this stuff in the box.
Like he opens the box and the camera's staring right at him, and it's like, and so, but then he doesn't get in your house. He just gets on your porch with your box.
That's $1 million idea. Putting outdoor
like the Amazon locker
mailboxes. We can build them for people. If you don't want Amazon in your house, we'll build this box for you.
All right. Well, there's your new $1 million idea.
It's probably a $30,000 idea, but it's fine. It's all good.
It's all good.
Yeah.
Well, you just put that on a podcast. So
yeah, it's all good. Yeah, so I guess if we see that come out, we need to see if it's a listener. All rights reserved.
Quick, patented. In other retailer competing with Amazon, but not really news, Target. It's sort of interesting. Target now says the customers wanted to pause the Christmas creep. For November, Target will keep Thanksgiving signs and displays at the entrances, and its marketing will play up Thanksgiving meal preparation and entertaining for shoppers. Quote, they want us to pause and to be really intentional and recognize Thanksgiving. What they don't want us to do is go right into Christmas, so we are going to respect that. They're changing their whole sort of holiday marketing thing and their way. They used to do 10 days of deal strategy. Now they're just doing deals on weekends starting on November 11th. They're also shifting their focus to convenience. A new service on Target's website lets people click on a Gift Now button for products to send an e-gift. Then that lets the recipient know, and the person can change the color or size or choose something entirely different all before anything is shipped. That's what they are doing. I wonder if they're going to still open Thanksgiving Day then.
I don't know, but I'm not loving their stock at all. They just announced that they're raising their minimum wage, and they're already higher than Walmart, Amazon, and Costco. And they're raising their in-store minimum wage to retain employees. I think Target's in trouble. Just overall.
You don't like their stock, though, but I talked about it with my target being the 63 level.
No pun intended.
What?
That your target was a 63 level?
And it was hit earlier this week before now it's pulled back to $60. So my full target with the gap fill to the bottom of the breakdown zone was hit.
When was 63 hit?
Earlier this week.
Really?
It was hit, see, what was the high? High 63.24 on 63.24 on 1024.
I've got 63.62.
63.62 on 1023. So that was the high. Yep. So my target was hit.
Yeah, it's just not my favorite long-term hold of these guys. You know, retail in general has been doing better. Target has been trying to make an attempt, but I mean, you want to compare it to what Walmart's chart has done, you're looking at two different things.
Yep, Walmart. Well, we've talked about that. That's hit. That
Amazon
hit
as well. Go ahead,
well,
Mike.
we had my targets on Walmart around 87.81 to 88.14, and this week we hit a high of 89.11. So all the targets are met on Walmart.
Yeah.
And those targets were put into place back in August.
Yeah.
So, yes, that has outperformed Target bigly.
Bigly. Never understood why people don't know that he's saying big league.
I would just like to say bigly.
I just don't know why that ever caught on.
What, bigly?
Yeah.
I don't know. But it's Walmart's up bigly. Walmart, you talked about Walmart. Walmart tests shelf-scanning robots in 50-plus stores.
Yep. So
Walmart's extending their shelf-scanning robot trial run to 50 additional stores. Machines from Bossa Nova Robotics will roam the aisles to check for stock levels, pricing, and misplaced items, saving human staffers the hassle of checking everything themselves. There'll be technicians on site just in case, but the robots are fully autonomous, thanks in part to 3D imaging. They can dodge around obstacles, make notes to return later if their path is completely blocked. Walmart stresses, I like this, Walmart stresses that the robots are there to supplement humans, not replace them.
We heard that back in the day when the exchange brought on the electronic trading to just supplement the pit traders. Not to replace
Are you in the pit now?
No, I'm not. Exactly. I got replaced.
You got replaced. Well, they said they do need, the robots still aren't good at restocking shelves because they have trouble grabbing certain items and everything. So that's still the limiting factor. But if you have all these robots roaming the store to do a lot of the drudgery work they say that humans don't want to do, well, you're still going to need less humans because when the robot's done scanning and says, okay, human, this is what's going to happen. It's going to report back to the human and say, okay, now you start stocking this area because we've done everything else. So
it's also going to get better, rather happier employees at cheaper costs because you would have to pay more to get people to do drudgery that they don't want to do. That's theoretical, of course. I mean, if you're working at Walmart, they tell you to do the drudgery, you're going to do it, but you're going to do it grudgingly, and you're going to be looking for another job. If there's less drudgery, there's going to be, you accept less pay and you don't search for a better job. Again, economic theory doesn't necessarily always work in practice.
So and finally in our food and fashion nook or whatever it is, McDonald's.
Did we already do that?
No, we're still in it. Let's see, Walmart fits in food and fashion.
Gotcha.
Amazon still, I've lumped it in food and fashion but they do everything. We just had to lump them in somewhere. And we had Stitch Fix, or Stitch Fix, or whatever. I can't say it.
Stitch Fix.
Yeah.
Stitch Fix.
And finally, this is definitely in food and not fashion corner. McDonald's is now expanding delivery to 5,000 U.S. restaurants, so maybe a restaurant near you can deliver you a Big Mac.
Yeah.
Are you more likely to order Big Macs because you can get it delivered?
Honestly, yes. Honestly, I am. So one of the reasons I eat a lot of Jimmy John's is because of how quick they deliver and how cheap they are at the same time. But there's times I'm craving something else. I just don't want to go through the hassle of trying to go through one of the odd apps that might deliver. And there was also an app for a while that I used. I can't remember what it's called, but their little icon on my phone was a bicycle. And they essentially were like a delivery personal assistant. Again, I wish I could remember the name right now because I should. Anyway, they would go out and do anything for you. Like if you had to, I don't know, drop off a letter in the mailbox, you could call one of these guys. They would come and they'd pick it up and drop it off. I can't think of a better example than that right now. They'd pick up your cleaning for you, right? And it was just all these guys on bikes. You would have to call one of them. And they would go to McDonald's and stand in line for you. You could have called this particular company to have a person stand in line for you to order your Apple X phone, your iPhone X. And they would have done
online.
Well, whatever. I'm just saying you could stand in any line. You could buy tickets, whatever, theater tickets. They would just stand in line for you. They would do anything you wanted them to do outside of where you were. I used to use them if I wanted something other than Jimmy John's. But then that just became a hassle as well. I'll remember the name before the podcast is over, but I can't remember. But I stopped using that too. I generally stop using a lot of these things after a while, and I end up deleting the app, which is why I don't know it anymore.
Well, speaking of McDonald's, pulled back rather nicely to the rotation zone, turning back up now. So we'll be watching for a return to the 167.90 level, and then the next level's higher, 169.73 and 171.56.
Mike's targets.
Those are the targets for McDonald's after returning to its rotation zone.
I'm going to do it like a regular analyst, Mike, not like you.
What's that?
My targets. I'm going to be the compare and contrast the regular analyst. In my target, I'm raising my McDonald's target from 160 to 164.
But it's already trading above 164.
That's how good I am.
Oh, you're really good.
Yeah.
You can't even go out on a limb and say, like, right now it's trading 165.19. You can't even say your target's 166.
Listen, why should I? The other analysts don't. I'm being a traditional analyst. If I were at Merrill Lynch or Morgan Stanley right now or Goldman Sachs, I would be getting applauded for this. And yet you mock me.
I guess, yes, I do.
Yes, you do.
But I mock them. I can't stand these.
I know, they're just awful. I hope everybody's picking up my sarcasm in this.
Well, congratulations, Bob. You just nailed the target that was hit a couple days ago.
Perfect. Thank you.
But what's funny is it was higher than that, and it had to pull back to hit your target you just raised. It was trading at the end of that last week. It was trading at 167.90. So you were actually raised your target, and it pulled back to hit your target.
That's awesome.
We already touched on we have the phone is broken corner, but we didn't mention that Apple just acquired wireless charging company Power by Proxy. So that was a New Zealand firm that's known for creating the Proxy Module platform, a wireless power and data system that can be adapted and incorporated into various types of devices to give them wireless capabilities. Just because the iPhone X and iPhone 8 can now be charged wirelessly. So they made their acquisition of that. Did Microsoft release earnings this morning? Oh, no, they did it yesterday. Yeah, hold on. We got a lot of earnings. First of all, we already touched on Amazon, but Amazon Q3 earnings per share was estimated at 52 cents. It came in at 52 cents versus expectations of 4 cents. Revenue beat $43.74 billion versus expectations of $42.19 billion. What's interesting is operating income. Amazon Web Services made money. The rest of the company lost money.
You made a lot of money, though.
Yeah, made a lot of. That's what I'm wondering, though, because web services, there's no moat around web services. So, and that's their big. That's pretty much offsetting the losses of the rest of the company. So the rest of the company loses money except for their web services.
We're about to lose more with that camera thing.
And then Whole Foods, $1.3 billion in revenue, $21 million in operating income, 1.5%. So for Whole Foods is bringing in, that's what their acquisition is doing. What else do we have? So that's when Amazon gapped up big. So it'll be interesting. Now they're trading 1082. Maybe I should come up with the next price target on that. Can I do that real quick?
Oh, what, Amazon?
I want your analyst price target for Amazon.
994. I'm upgrading from 992 to 994.
But it's
yeah, I know.
1,000 higher than that.
Correct.
You can't even get it above 1,000?
I just, look, you asked me, I told you. What do you want from me?
Well,
I'm an analyst. I can do what I want. I get a big salary to do this. So
are you on TV a lot too?
I am. How did you know?
Next price targets 1102 and then 1121. I expected it's probably going to pull back. The key support's going to come in, just so everybody knows if they're watching for a pullback, 1070 to 1064. So, but I guess I'm not an analyst because I actually give real numbers. Let's see, Intel, Q3 earnings per share, $1.01 versus expectations of 80 cents. Revenue, $16.1 billion, expectations of $14.41 billion. So that beat nicely. What did their stock do? Intel, big gap up, trading right now 43.50 from a high of 43.94. Microsoft, they've also had a massive gap up. Their trade 84.58, high of 86.20. They've surpassed all my targets right now, but again, they probably will pull back. I don't have do you have their earnings number? Because I just had the revenue number. They beat on revenue 24.5 billion versus expectations of 23.56 billion.
I do not have it. I can invite you.
You're an analyst.
Yeah, I just upped their target from way below to where they're trading now.
You know, you could.
It was the best job on the street, I swear.
This is just so depressing.
What is?
All right, they 84 cents a share versus 72 cents expected. So that would be that. GM beat earnings per share 132 versus expectations of 109, and revenue beat 33.6 billion versus expectations of 31.6 billion. And they're selling off. But they were due for a pullback. Oh, this is so funny. Morgan Stanley, you know, the company that notoriously keeps pumping up Tesla.
Yeah.
And raising, you know, they're like on divisions that don't exist yet. And Tesla's undervalued. You know, they just raise it and raise it, raise it. They came out this last week and said, GM stock price gone way too far, way too fast, due for a huge pullback. It's like, okay, versus Tesla, that's, and you just keep upping the target every time there's bad news on it. Thank you, analyst. Caterpillar beat with their adjusted EPS because they can't actually produce real numbers, but they beat 195 versus estimate of 125. McDonald's came in line 176 versus 176. Revenue hit exactly 5.75 billion, expected 5.75 billion. Let's see what let me go jump back to Caterpillar. That was another big run up. This pullback, they hit 140.44. I'm watching for a pullback gap fill back down to 132 though on that one. That's got it overextended. AT&T, 74 versus expectation of 74 cents. Revenue did miss 39.7 billion versus 40.1 billion. AT&T is a stock a lot of dividend players own, and they did not like those results. It traded down to a low of 33.33 this week, bounced up a little, 33.93. But that's a broken very key support, and it's got a rotation zone against them. So if it does a gap fill, I wouldn't expect it to trade about 34.80 and then rotate back down. Nothing I'm looking to buy there. Another stock I'm not going to touch.
My most loved stock that you will not let me buy.
Well, we bought it when it hit the top,
did,
and then it tanked, and now it's trading. It traded down to 270 this week.
Chart just looks
Chipotle.
awful.
Chipotle earnings per share 69 cents versus expectations of 163. Revenue 1.13 billion versus 1.14 billion expected. Q3 comps 1.1% versus expectations of 1.2. So their queso dip, their queso sauce, which they rolled out, did not turn their results around.
They needed to roll. Is it a Chipotle queso? Because that's what they needed it to be.
What do you mean? You mean does it have the Chipotle flavor in it?
Yeah.
I don't know. I've not tried their queso sauce because it's like
It's a bowl of cheese. It's a bucket of cheese.
But it's a tiny bucket of cheese for like $125. I'm not paying $125 for a tiny bucket of cheese. I want, I expect because of the prices of avocados for when I get a tiny little bucket of guacamole to pay out the day, but not for cheese. I cannot justify. Oh, fascinating. We talked about earlier. I haven't checked on Chipotle in a while because I've been so bearish on it, but my targets were 302, which were hit a few weeks ago and found major support at that 302, went up to rotation zone, trading 278 right now. My next target down, which has been in place since, this is for a while. Wow. Technically, that's been in place since last October, over a year. Look at this. My next target down is 251.55.
Just so ugly.
Yeah, that's another thing. We have Twitter.
Mm-hmm.
Twitter is up. Finally, it's breaking out of its horizontal channel. So that's one to keep a watch on. Non-GAAP earnings per share. Again, why can't people produce GAAP? Because the numbers don't look as good, but they beat with non-GAAP 10 cents versus expectations of 6 cents. Revenue beat 589.6 million, estimate 587.5 million. Monthly users up 4%. However, they came out and also said they overstated the number of users for 3 years. Twitter said it realized during the third quarter that it has been including users of a service for third-party apps, monthly users that should not have been counted. Twitter restated its users for the past 3 quarters, revising down by 1 million to 2 million, but said it didn't have user data going back farther than that. Oh, it's just hilarious. But people are celebrating Twitter. Next target for Twitter is $23 to the upside.
Yeah.
That's all I have on major earnings this week. Did you have any update on crude? Because it's up big today.
Yeah, it's interesting. I was on Bloomberg this week, and I don't think I sent it out, so I don't think we tweeted it, but there was a rumor of an exit strategy to the production cut for OPEC and their partners in the whole shenanigans. But yesterday, Prince Mohammed bin Salman, who's the crown prince, Saudi Arabia, basically said, of course we want to extend the production cuts. So to me, the whole thing about a general exit strategy for crude oil, which I said on Bloomberg prior to, pat myself on the back here, prior to that announcement coming out, that I think they're going to extend it. They're going to extend it soon because it's actually starting to at least stabilize prices closer to where they'd like to see them. We're up 2% today in crude oil, mainly off of that comment. Brent crude jumped above 60, and we're above 53. Oh, we're close to 54 now. I think the high is, where's the high right now?
Right now we're trading 53.74.
Yeah, the high is 53.74 the way I see it, but I might have a delay because I'm looking on my phone. Anyway, this is the first time that Brent crude rather has been above 60 in 2 years. So it's taking hold. And I don't think there's anyone more influential in OPEC than the Crown Prince of Saudi Arabia. They like to say it's the oil minister that runs it, but he don't. He don't run no OPEC. OPEC is still Saudi Arabia, and the Crown Prince runs everything that goes on with OPEC. And for him to make a public comment like that, and then them not extend the production cuts would be odd. Again, I want to say that, and we can throw that Bloomberg up on Twitter if it's necessary. But I said it before that announcement came out that I think they're going to extend it. I don't know where this exit strategy conversation was coming from. So also, we now have 10 of 12 weeks lower in rig counts. We're going to get another rig count today out of the U.S. 10 of 12 weeks lower in U.S. rig count for crude oil. And the 2 weeks that were not lower, one was flat and one was up 1. And also this past Friday, we had a drop in U.S. rigs of 15, which is the biggest number in that entire streak of 10 of 12. So that to me is now at least a short-term trend. So we'll see. But crude oil to me is sideways with a bullish tone to it. I don't know that there's enough juice right now to break above the highs that we saw a few months back. I think it was 54 and some change.
54.94.
Okay, so let's call it 55. I don't know if we have the juice right now to get through there. Obviously, I don't think we will today, but that comment by the Crown Prince was kind of a big deal. And again, Brent pushing up. And Brent is pushing up while there's actually pressure on the supply side for Brent because U.S. exports are the highest they've ever been, the highest in history. So that means that there's more supply going out to the Brent buyers from the U.S. than there ever has been before, and you're still getting upward mobility in the price of Brent. So, yeah, there's nothing groundbreaking, nothing earth-shattering that's gone on in crude oil. Numbers have come out like they've come out. You know what I needed to look at, and I didn't do it yet? I didn't look at refinery utilization for this week, and I still think that that's the most important piece of data that we get out of the EIA. I'm going to look at that, but that's really all I have on crude.
Sorry, my high, I gave you the wrong high. It was actually 55.24. My next target for crude is 54.45. And the double, that was a potential double top, is no longer valid.
Okay.
So that's where we stand. But your probably target was, you've probably raised it now to 50 or something. So.
Yeah, I've raised it to, where are we right now?
We're at 53.84.
I've raised it to 53.80.
Very good. You're spot on with that again.
Spot on again. Those analysts are so good. So good.
On. And that's a perfect tie-in to from crude to electric and self-driving cars. When we're all electric cars, we won't need crude anymore. So, Daimler Chrysler in Tokyo, Japan. There's a big auto show out there. They launched their Fuso all-electric heavy-duty truck, the Vision 1, with 350 kilometers of range. So sorry, Elon, you weren't the first. Again,
are we at Elon yet?
We're getting to Elon. I had to get through the Lexus LS Plus concept previews automated driving technology from 2020.
Mm-hmm.
Again, they use LiDAR. Also, sorry, Elon. But they're showing the highway teammate tech allows the LS to drive under its own control under restricted access motor vehicles only roadways. It can take over driving duties from entrance ramp to exit ramp, says Lexus, including merging and lane changes. The tech also keeps the car in its lane, something that Autopilot 2.0 fails to do on a regular basis, and maintains an appropriate following distance behind other vehicles. So that's similar to what some other cars can already do, but now it's you sort of get on the on-ramp and you hit the button in it, and until it gets off the next off-ramp, it drives your car for you. Now we can get to Tesla stuff, but first, Elon Musk. This is a great headline this week. Elon Musk hints Tesla Model 3 will be psychic.
What? Wait, what?
Tesla CEO Elon Musk has hinted that the Model 3 and other self-driving cars will soon be able to use artificial intelligence to predict where you want to go. The new autopilot update, first you had to get it to stay in its lane, Elon, could allow Tesla vehicles to take their driverless capabilities one step further by anticipating the destination of its passengers, Musk told Twitter users on October 21st. Quote, it won't even need to ask you most of the time, Musk said in response to a question about whether future Tesla autopilot updates would allow the passenger to ask the electric car to take it somewhere. So you wouldn't even have to ask it. It'll just drive you where it thinks you want to go.
Spectacular.
What if it takes you to the wrong? What if you wanted to go to Jimmy John's and it takes you to McDonald's? No, I'm sorry. Whenever Tesla starts having major trouble, Elon's tweets get very interesting. And then you had Tesla strikes a deal with Shanghai to build a factory in China, although they're still going to have to incur China's 25% import tariff. So labor will be cheaper, but they're still going to have to plot, even though it's in the Shanghai Free Trade Zone, they still have to pay a 25% import tariff to every car they build there, even though they're built there. So Tesla did not get a break on that. But at least they don't have to split, which I don't think anybody do, because I don't think there's a Chinese auto manufacturer that would go 50-50 with Tesla, because Tesla burns through billions of dollars.
Right.
So they're like, you could build your own factory here, because what other companies have had to do is you go, like GM, you go 50-50 with the Chinese arm of it. So, you split costs and revenues 50-50. But I don't think anybody would touch Tesla with a 10-foot pole. So they're like, you can just build your own factory. You just have to pay the import tariff. And in more, Tesla is now preparing to bundle about $340 million of solar power purchase agreement in the bond offering. So they're issuing more bonds for Solar City, and they did more mass firings this week at Solar City. So they're making really a lot of news on these mass firings at Tesla and Solar City. Again, these were all performance related on people who did not get any performance reviews. Even since Tesla acquired Solar City, these people are coming out, we never got a performance review ever, and they won't let us see our performance reviews that they say they have, and we've now fired. And it's actually making a lot of ripples, and it's making a lot of national news about how more and more people are just getting fired on this performance review thing, and they never still notified the California labor board that they were going to have these, because they're not layoffs. They're just everybody fired, like these 1,200 employees. They were just bad performance, Bob, all within the last 2 weeks.
This house of cards is just falling apart.
Oh, well, yeah, this was great. He came out, this was yesterday. Elon Musk, by the way, just want to express a word of appreciation for the hard work of Tesla Gigafactory team. Reason I camped on the roof was because it was less time than driving to a hotel room in Reno. So this is the Gigafactory that's also in Nevada that's having a complete disaster right now. Production hell 8 circles. So, referring to, I think, Dante's 8th circle. So when you look up what is the 8th circle of hell? The 8th circle of hell is fraud. Panderers and seducers, flatterers, sorcerers and false prophets, liars, thieves, and Ulysses and Diomedes. That's the 8th circle of hell. So we have liars, false prophets, and everything, and he should probably not be citing the 8th circle of hell.
And now we have a new segment, Mike's Conspiracy Corner.
Yeah, see how I told you I pulled a Stafford. I told you I did it.
I love it.
No, but I had to. He cited all these. He had to put in the 8th circle, so I had to. I did not recall from Dante's Inferno which was the 8th circle, and it's directly related to fraud. I don't think he should have cited that one, but maybe it was subconscious.
It's a house of cards, and it's really starting to fall apart. This is an extremely intelligent individual with an ego the size of, I don't know, something large.
Mars.
Maybe Mars. Can't fit his ego. And he built a great boutique little car. But as the demand for that car rose, it's falling apart, and it's falling apart fast. The chart is really ugly. It looks at least 308 to me, Mike. I don't know what you think.
Well, we triggered a trendline trade earlier this week with targets of 319. It just bounced off its 200-day simple moving average around 317.30. My next target down is 303.13, and then if we get a close below 303.13, I'd be watching for a close below 300. It's just going to be that big psychological number on a weekly basis. We've then triggered my massive double top, which has targets all the way down to 219.27.
Wow.
Yeah, wow.
Yeah, I mean, it's falling apart. And it's interesting because, like, there's been a lot of, let's just call them like hedge fund celebrity types. Jim Thanos, I think his name is it was one of the loudest voices that have been shorting this thing forever. And they're like, you can't look at this company and want to buy it. But they understood that there's this sort of fanboy bid to it. But I watched a video recently of a bunch of Tesla owners in, I believe it was Norway. The company had invited Tesla owners to a conference in Norway. I believe it was Norway. And people were asking questions about the autonomous driving, and the head of Tesla sales, the head for global sales, was just dancing around the question about how they're supposed to already have fully autonomous driving. And people have paid $8,000 for, I forget what the option is called, but it's essentially hands-off driving where you do nothing. They prepaid $8,000 for it, agreeing that they're buying something that isn't out yet, right? But it was due in months, and it's been like over a year, and people paid that money out. And they promised that it would be just an on-the-road update for this fully autonomous driving feature. I wish I could remember what it was called. I'm going to look it up while we're talking about it. But the actual Tesla owners, like when they were asking questions, they were doing that typical, in this video, they were doing that typical thing going, love the car, big supporter of the company, but almost to where they were like saying, look, I'm still on board, but what the hell? That's was kind of the attitude.
So we originally, so everybody's familiar with this, their original self-driving system was called Autopilot, which cost $2,500, which was from Mobileye. That was from Mobileye. And then Elon got pissed at Mobileye because I think Mobileye told Elon what was actually capable of being handled by hardware at that point, and Elon promised something much bigger. Yeah. And they got into a spat, and he threw Mobileye out. They then came with enhanced autopilot, which is fully based off Tesla tech, which then went to $5,000. And that's where 2.0 version is, which they've surreptitiously updated to 2.5 in certain cars because it had to even have more powerful NVIDIA technology that NVIDIA says isn't even capable of full self-driving. But
it's 12 cameras around the car. 12 cameras.
12 cameras and lasers.
If you have enhanced, you can get it with only 4. If you get the full 12 driving, the full self-driving, that adds 8 more. That's where you get the 12.
Right, and that's the $8,000 option.
Correct. Now
people paid.
Yep.
Lots of people. There's already a class action lawsuit based on it. Yes. And the whole thing is that, remember that video we watched months back? where the video starts with Tesla saying the driver is only there for legal reasons. He does nothing.
Yeah. Mm-hmm.
Yeah. They're citing that video as being, it's paramount to the lawsuit because they're citing that video as being like misleading.
Right. But what I was going to say is the enhanced autopilot that they currently have rolled out, the one that they replaced Mobileye with, can't even do what the Mobileye one. They're still trying to catch up with where they were with Mobileye. And they're not even to that level yet. And they're full self-driving, which NVIDIA says is not capable even with the 2.5 chipset, which is in there putting in the cars now. And NVIDIA, who makes the chipset, says it's not capable of full self-driving. That's why I think Elon's breaking with NVIDIA now, and they're going to have to go to a third supplier because the whole problem is he's promised something, and they've lost two heads of their self-driving program within the last 6 months. These people just keep resigning. They're like, we're out of here because I think he says you have to make it work. And they're like, dude, what you have installed in your cars is not capable of what you said it could do. That's just my own theory. So we'll have to see how this all plays out. But it is class action status now.
Yeah, you can't do this with just cameras. He's using 12 cameras. You got to use other stuff.
Well, he's the only car manufacturer in the world that's going after self-driving, not trying to use LiDAR. He's the only one. So either he's right and every other car maker is wrong, or he's wrong and every other car maker is like, you need to incorporate something other than just cameras and radar to properly map it. And you have to have some of this mapping software and everything else to be able to geo-fence the cars so they can interact properly. And he's like, no, the cameras will do everything. The cameras, it'll all just be sight like in the car, and there won't be any communications with anything outside. The car will take care of it all, which pretty much is disagreed with all the major big players, especially the leaders like GM, who's now leading the self-driving car race.
I'm just rewatching that video as we were talking there with Tesla. I'm watching that self-driving car video where it starts off by saying the driver is there for legal reasons. The car's driving itself. And I'm watching like the jerky motion of the steering wheel and the guy kind of jerk around in the seat. And I remember when I first saw it, I was like, this is really cool. And as I watch it now, I'm thinking I would be so like sick after this ride. I mean, just being in normal lanes, it's got these jerky motions to get it back in lane. It's slams on the brakes, stop signs and stuff. This guy gets out really fast and the car parks itself. I'm sure he's going to vomit. Anyway, yeah, we can go to cryptos. I hate Tesla stock.
Now, Overstock, the company, is releasing a blockchain product to curb naked short sales. They've, over the years, been a big... They've been targeted by short sellers, but who couldn't actually borrow the shares. So they actually came up with a blockchain product to now curb naked short sellers. If people don't know, when you short a stock, you actually have to borrow it. And a lot of firms weren't requiring people to borrow the stock. They just let them short it without fulfilling the borrow requirement. So Overstock's been fighting that battle for years. And 3 years of development, the subsidiary of Overstock has come out with the digital locate receipt, DLR, the technology based on the company's T0 platform, appears to be designed to curb the practice of so-called naked short selling. This actually uses blockchains to keep all DLR creations and purchases are registered to the blockchain, creating a permanent order trail and accessible digital record. So they want to use that and get that put in so the blockchain, there'll be an actual record of people having to borrow the shares instead of just, they borrowed them and there's no record of those shares being borrowed. And they're also in other Overstock news, their T0 division subsidiary, so T0 has formally announced an initial coin offering, an ICO. So the ICO will be facilitated via the sale of simple agreements for future tokens, a model that was previously used in token sales like the one for Filecoin, which raised more than $200 million. The T0 token, according to statements, will trade on the alternative trading system platform being developed by the firm, the Aragon Group, and Regen, companies hired to advise the development of the ATS, the alternative trading system, will also work on the SAFT offering. So Patrick Byrne, Overstock.com's CEO and chairman of T0, said, well, many doubted the T0 team worked hard to be at the tip of a spear in creating and launching credible, capable, and institutionally scalable blockchain technologies for crypto assets. Today, those efforts are still attracting interest from both the crypto community and the largest global institutional funds. So they're developing a whole trading platform and developing this ICO, will be raising funds. That is actually an ICO I am somewhat interested in because they do have credibility. They've been pursuing this technology for a while, and they're not just trying to do things like fly by night. They're trying to make a whole trading platform that's fully monitored and regulated and using blockchain to be the backbone of it. Fascinating stuff from Overstock. And then we have Bitcoin Gold, another fork in Bitcoin. So hard fork, Bitcoin Gold. This is the hard fork that will actually, the whole point to this was they thought the current miners, which are these mega huge companies using all the super high-tech hardware, you can't be able to mine Bitcoin Gold in that you have to use the old GPUs, the older technology and GPUs, which are more available to everyone to mine a Bitcoin Gold. So they're trying to get away from the application-specific integrated circuits that now most of these companies use to mine Bitcoin, and go back to a more decentralized, because they believe that if there's just a few mega miners mining the cryptocurrency, then you don't really have a decentralized currency. So we need to let the average Joe be able to mine these. So we are going to let the average Joe with GPUs mine it then.
It's pretty bright.
So that's the Bitcoin Gold, which if you had Bitcoin when it hard forked, you'll be able to get on Bitcoin Gold for every Bitcoin. I have not seen how you can retrieve that yet. Still looking into that. That is the major crypto update. Bitcoin right now got back to, what was the high? The high this week was 60.20 over to 6,000, now pulling back again to 57.29. This 6,000 barrier is very, very psychological, and it's been not able to sustain a close really above it for a while. So that's providing the big psychological area to watch for with Bitcoin. And if you want more daily updates, pretty much every day on our YouTube channel, there are cryptocurrency updates covering the majors. U.S. economy, anything else on cryptos before we get to U.S. economy?
Nope.
You're not going to say that was very interesting?
No.
Nope.
No. I don't know what GPUs are, so.
Graphical processing units. Stafford, can you explain GPUs?
It's like one of those mixers. You don't want to, mix the dough by hand. You want one of those big mixers,
Yeah.
that spin around. That are serious metal. The KitchenAid.
Now I know it. Now you're talking my language.
The GPU. It's some serious torque into that dough.
I would have never explained GPUs using an industrial mixer, but okay.
I know industrial mixers, man.
Yes. Well, that's how the bread was made. That is dropped into the bread hut with the lock.
What are you talking about?
The bread hut on the porch.
Oh, the box.
The bread hut. The hut.
Yeah, we built it. We built
the bread hut. It's a hut.
It's the thing.
You can't just say it's a thing.
Yeah, put them inside the box. That's how it used to go. There's nothing sexual.
That's how it used to go, huh?
Yeah.
U.S. economy segment, manufacturing PMI beat, coming in at 54.5, expectations 53.4, last was 53.1. Services PMI came in 55.9, expectations of 55.2, last was 55.3, so both those beat. Durable goods orders in September, 2.2 versus expectations of 1%. Durable goods ex-trans beat also 0.7 versus expectations of 0.5, last was 0.7. Wholesale industries beat expectations, or missed, sorry, coming in at 0.3 versus expectations of 2.4. Q3 GDP just came out today, 3% versus expectations of 2.6. So that was a beat on Q3 GDP.
Yeah, we have a nicely accelerating economy right now. You can attribute it to whatever you want, but the data is, we've lost that sort of some data is weak, some data is strong thing. It's basically all moving in the same direction right now, and earnings are doing pretty well. As of last Friday, I don't have an update yet, but as of last Friday, we had 76% beating on EPS and like 72% beating on top line revenue. So things are all pointed up. The House passed the budget resolution yesterday, so the tax cut bid is still in the equities. Equities look good.
Equities, yes, they have surpassed all my targets, except the next one I have is 62.02 for the NASDAQ, and we're on our way there, 61.89. So
GDP deflator also beat. I think came in at 2 or 2.1. The expectations were below 1. So I'm sorry, below 2. I think they're like 1.6, 1.7, something like that. And that's a key. That used to be Bernanke's, not Bernanke, but Alan Greenspan's favorite inflation indicator was the GDP deflator. And subsequently, it was a lot of bank traders back in the day loved to look at the deflator. So that was pretty significant that beat as well, because it gives the Fed a little bit more cover overall in terms of them hiking rates, not just in December of this year, but also the odds continue to move up for next year. So I had mentioned before that the Fed CME Group Fed Watch tool was showing like a mid 30%, somewhere in the 35, 36% range for a second rate hike in March. And we're still there. We're at 35%. But I suspect that after today, with this GDP number, we're probably going to start reach up into that 40. We have not fallen off that level at all.
Fantastical. Anything else on the U.S. economy from your perspective?
Oh, it is strong. And again, guys, this is relative. I mean, we've had much stronger recoveries than this, but we're accelerating now. We're actually, that's 2 GDPs at 3% in a row. That's a good thing.
Can you also,
last thing. Very little hurricane damage in any of the data. Very little. We had some brief adjustments in jobless claims. But other than that, I mean, the data has been virtually without damage from the hurricanes. Very small. People were dropping their GDP forecast to 2.5, 2.6%, and we came in at 3. I mean, that's pretty impressive.
We'll have to see if it gets revised, though. It
will get revised, but we should have a decent amount of the hurricane data already. It should be other things that cause revisions, but we just don't know.
Well, here's where I really need your help.
Shoot.
Mario Draghi this week. I need you to break it down for me.
Break it down for me, fellas. This will be a good time.
Break it down for me. Tell me what Draghi and who's Draghi?
He is the head of the ECB, head of the European Central Bank, president of the European Central Bank. So Mario Draghi and the ECB essentially did the equivalent of the taper that the Fed did a while back. The difference is that while the U.S. Fed was going to taper their purchase of assets, quantitative easing, they were going to slowly chip away at the amount they were doing. Draghi and the ECB said a while back that they were just going to flat out cut it and extend it, whereas the Fed didn't do that. The Fed first stopped purchasing assets, and then they stopped reinvesting, which was, first one was considered the taper, and the second one was considered balance sheet normalization. So Draghi extended the program through September of next year, so September 2018, but cut the amount that he was going to be buying in half. So next year, 2018, it's going to be 270 billion euros purchased by the ECB at a clip of 30 billion a month. Again, euros, 30 billion euros a month through September. They're going to continue to buy what they have been buying, which is 60 billion a month, through December of this year. So essentially, they put an end date on it. And then right after that, they said, but the program is flexible. And we can either cut it or raise it as we see fit. And Mario Draghi specifically said that while we've put an end date on it, we reserve the right to go in either direction. The ECB has been coming up against legislative limits. The ECB only had the legislative authority to buy a certain amount of total assets, and they've been coming up against that. They've been coming up to that limit, so they needed to do this. So essentially, in my mind, what they did is they bought themselves time to extend it if need be. Mario Draghi, by the way, this is my why. So I'm basically doing my why since I have a hard stop soon anyway. Mario Draghi basically engineered a taper without a taper tantrum, which was brilliant. So he cut the program and he extended it, which some might see as a wash because it was supposed to end in December of 2017. Cut the program, extended it, and then said we could still extend it again. The euro got hit pretty badly. It was at 1.5% over the day and a half after that. I don't know where it is now. But the Euro Stock 600 rallied, the DAX rallied, the FTSE rallied, the CAC rallied, the S&P rallied, and the Dow rallied. So he essentially cut quantitative easing and rallied the equity market. This is a brilliant performance. Dovish taper is what we're calling it.
Dovish taper. And that sounds like TV speak to me. I like it. Dovish taper. Well, you already, you prematurely wide.
I did. That was my why, guys. I'm sorry that I didn't announce it before, but that was what it was.
And I what then? I what?
Today's edition of The What and the Why is brought to you by Motive Wave Software. Motive Wave Software is a well-established developer of easy-to-use, full-featured charting, analysis, and trading software built for the individual trader. Motive Wave offers the best charting tools used by the pros, such as Elliott Wave, Fibonacci, Gartley, Gann, ratio analysis, but it's presented in a very easy-to-use way. Motive Wave has a product to fit any budget and any trading style, and one of the very best features, it's available on Windows and Mac. So go to pathtradingpartners.com right now to get your 14-day free trial, and then visit them at motivewave.com. Coming to that limit. So they needed to do this. So essentially, in my mind, what they did is they bought themselves time to extend it if need be. Mario Draghi, by the way, this is my why. So I'm basically doing my why since I have a hard stop soon anyway. Mario Draghi basically engineered a taper without a taper tantrum, which was brilliant. So he cut the program and he extended it, which some might see as a wash because it was supposed to end in December of 2017. Cut the program, extended it, and then said we could still extend it.
I do a
Yeah,
what?
please what?
I have a pretty nice potential double bottom in gold on a weekly basis. Really nice pattern. Would need a close back above 1308.40, and then we'd be looking at first target 1342.60, second target 1354.
Wow.
It's really a pretty formation.
Yeah. Can you look at, before we wrap it up for this week, can you look at a Goldman Sachs daily?
Sure. I can do that for you.
Thank you, Michael.
You know, I'm here for you, Bob.
Thank you, Michael. One thing we're seeing is we got good earnings out of financials so far. We had great earnings out of tech. We have fair earnings out of energy, but energy prices are rising. So it's a pretty favorable environment for stocks, even though the Dow's only up about 32 right now. And as we speak to you guys, which is, as always, Friday morning, like late Friday morning. The S&P is up 0.75%. And the big winner for today is the NASDAQ. The NASDAQ is up 2.5% right now. On the back of Microsoft being up 6, only as I'm speaking. Microsoft is at Microsoft, which doesn't suck right now, is up over 6.75%. Intel is up 6.5%. Google, Alphabet, 6.33% right now, up. I mean, they're just screaming higher in the tech sector.
Did you want my take on the potential double top on Goldman Sachs?
I do. Amazon up 12.25% right now. Yes. What do you think about Goldman?
I think it's got a potential double top, which if it triggers on a close below 235.19, I'd actually make it a close below 234.87 at this point because there's the 50-day exponential moving average.
Mm-hmm.
So which is probably by the time this triggers, that will be at 235. So I'm going to call it a close below 235. We then could trade down to a full target of 223.31.
Wow.
Yeah, I trade this as two targets too because the shorter target is where the prior breakout zone was. So that target is 226.28. So I trade this two targets.
All right. Will you let us know if that triggers?
Sure.
Please.
I'll keep an eye on it. But there's your Goldman Sachs potential double top.
Perfect.
And
all right, gentlemen, I have to take off to attend a very important meeting. Why did I think that as well? Oh, take off. Okay.
Take off, eh? Okay, that was a great show, eh?
Is that it?
Hey, you want to play Beer Hunter, eh?
Take off, you hoser.
You hoser. You can't do that. I'm Canadian.
That was a great, great song in 1980. What was that? When did that come out?